Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good afternoon. My name is Scott Redler, Chief Strategic Officer at t3live.com. Welcome to today's recap and look ahead. So you walked into this morning with fireworks, right? The S&P was up 25 handles. You had the NASDAQ futures up 55 handles. Everyone on TV is ranting and raving. You know, the sentiment all of a sudden switched from Brexit, which we heard over 500 times last week, and only remain about 50, to now they're going to stay. So, I guess some of the unwind of risk off to risk on, came in effect. But last week we were as low as 2,050 in the S&P cash. So at 2,100 in the first 30 minutes of trade, it was hard to get much more than that. And we basically dribbled lower, for the whole entire afternoon. So, if you bought the stock market after 10 o'clock today, you definitely were a bit frustrated, and you have to, think about your conviction level for that with Janet Yellen tomorrow, and then, the polls back and forth, and then the real, vote on the 23rd. So anyway, you look at the charts here, basically, here's your SPY. You go across, there's your little, resistance. Here was your breakout failure, and then, like I said, this was, where we bottomed last week. So, let's actually let me go to the SPX for you because we had that ex-dividend last week, so it's kind of harder to tell. So basically, from this little red dog reversal low here, remember that red dog reversal low on Thursday, which was as low as 2,050. We were as high as 2,100. So that's 50 handles. 50 handles, and nothing's really been that resolved. So that's why, today you didn't get much traction. So we'll have to figure out what's next. Still kind of symmetrical here, where here was your descending channel that we broke above. Here's your retest of that, and now, there's still a little bit of unknowns. If you go to the spiders real quickly, I just want to show you, what you could have seen, if you were trading it on a 5-minute, because we were just talking about that near the close. Well, first of all, here's your close, topping tail into prior resistance, so that people used to sell versus buy. So now we'll see tomorrow if we get some kind of packing and filling, and maybe you get like a red dog reversal tomorrow. But anyway, you go to your 5-minute chart just so you can see, because a lot of us trade on different time frames. Here you go. You do a little bar by bar analysis, right? So let me just get rid of this line for now. Here's my little delete. Let's see, click on it, delete. Okay. So anyway, here was your upper flag. This is your gap. Okay. Here's your first move up. This is what you want to write down if you're very short term. Okay. This spot. This is 208.81. Okay. Went sideways here, consolidating, getting very, very, very tight, and then what did this little symmetrical move break? It broke the 8-minute right there. That was one little signal that we might not continue, that we could get some kind of probing into the gap fill. Okay. From there, you can draw your line a little further. Never got back above it, and then really here you had a pretty wide range bar that took you below there. So anyone who bought in this spot, saying I'm going to give it to the low of the morning, which was 208.81, got stopped out right there. On that bar, you said, okay, I was risking 30 cents because I wanted to be involved just in case. Boom, I'm out. If you got out here at 208.81, you wouldn't have been involved for this close all the way down to as low as 208 or so. So you would have saved yourself 80 cents, and then you wouldn't know. Then we wouldn't have to deal with what might happen tomorrow because you still have a big gap fill. So either way, it was tight. I know I was long it here. I think I bought some here, sold some, stayed with it. I tried to buy more back, got stopped at a half, and then I actually got stopped at my spiders when it took out this area. I was like, you know what, I don't want to be involved. So with that being said, there's still a lot more to resolve. So if you're, depending on your risk tolerance or your time frame, you could be very flexible. One thing I did talk about, I said we have to watch high beta tech. High beta tech was very weak on Friday, closed near the lows with trouble from Apple. Excuse me. So see how long that could last. See how long the gap up could stay. If it stays in the complexion changes, chances are we'll have a stronger day. If they start to go red and they start to fade, it's not going to be overall good for the market. So look at Apple. Apple basically gapped up. Okay, let's do the same kind of bar by bar analysis. Gapped up, tried to go, couldn't. You could have drawn your line like this, okay, where you had your upper flag, or you could have drawn your line where the gap starts. Okay, you could have said, I'm going to try Apple verse 96, just in case it wants to rally, be strong, go against the Beijing pattern, etc., etc. Here was your out, or here was your out. And then you wouldn't have been in for this whole move down, and now Apple, to me, still looks, vulnerable. So you might note, I'm like, can you sell the rally in Apple? Well, it took a little time, and now look at it. It's not looking so good. It's below all the moving averages and under pressure. Okay, Netflix, same kind of situation. Netflix gapped up and went red. Is Netflix above the 8 and 21-day moving average like it was all the way into the past earnings, or is it below? Right now it's below, so you got to be cautious. Okay, and at this point, it looks as if this is more of a bear flag set up for a break below 93. It was downgraded today. If that's the case, you better be careful. I would not be long this Netflix overnight. Tried to go, rallied into resistance. The 8 and 21-day became that and got rejected, and now we'll see. I know I tried shorting this on Friday. It didn't work, and today I stayed away, and maybe tomorrow we'll see what happens here if it breaks to the downside. But I don't know how this market's going to last too long with, high beta tech looking like this. Even Facebook, which I was long most of the day, I got stopped out at the end of the day, couldn't really do much. We'll see what happens, I guess, if there's any news out of the conference, or the shareholder meeting, etc. But it rallied up, and what did it do? It got rejected by the 8-day moving average. And now it doesn't look like much. It looks like it's just consolidating here, and if it breaks this, it could fill more of this gap. I think the more people think about, the 330 billion valuation, they get a little scared sitting in it, considering LinkedIn was bought for 26. Okay, this is 330. It's not the same company, but a little rich. What's been trading better since that is Twitter, because Twitter actually is in a 11 billion valuation. So how much money is there to make on the short side? Not much. So anyway, I listed this a few different strategies here. One of them was a trade above this, and boom, you had a nice little move, big percentage. And also in this, said maybe buy some 6-month options out just in case it wants to get taken out. At a 20 billion valuation, you're talking a move to here or so, but it trades kind of like wishy-washy. So you had your quick little 2-day move, and now it's just trending. So whatever. Some guys were looking at gold. Gold had that false breakout last week, but with the down open, some thought it could have been a little bit of a range type opportunity in the nugget and the GLD. And if you look at the nugget, the nugget, I just make the nugget a noun. Well, anyway, it traded below this spot here, and what did it do? It held above the 50-day, so it gave you, a better buy than sell. Here was your false breakout. That was your sell signal when it went back below the prior high, and here's it on the opposite end. Very choppy, but a big range there. GLD. Kind of came right back above. I said, can it stay below 122, and could sellers have control for the day? It went to 122.13 and rallied pretty well, so it still has a bid there for the metals. So all in all, this big gap up wasn't the best thing the traders wanted, right? We were watching the NBA finals, awesome basketball, and you have to see futures are up 22 handles. I wonder why. Stay vote. Anyway, with the fade down, it's still a range. It doesn't seem like you need to be in a rush to buy anything. Same way you can't press lows for the market, because that's not rewarding you either. You can pick and choose spots. Oh, there's one little guy stock that I'm still in, or I just got in today. I'm hoping that with my luck, no bad news comes out. But overall, big gap up, hit a peak, nice and tight, closed near highs. So I'm long a little bit. So if you're on the VTF, if you wanted to know why, that's why. There was some volume there also, but it's very speculative. And oil, just to close it here too. Remember it closed on the lows on that Thursday and gapped up and trapped it and came up. If you were in it, I would say trim some here. I don't expect new highs in oil tomorrow. But these 3-day moves or into extremes, this held the 50-day, you want to sell. So hopefully if you're long some oil, this is your spot probably to trim and then wait and see. And that's it. It's Monday. Not the greatest action. We call this the gap and nap, or the gap and the trap. Hopefully not a trap where all of a sudden this is the high of the week in the S&P. If that's the case, then you got your gap and trap. But we have all these funny names, don't we? I'll see you tomorrow. Got to jump.